Welcome back to Grown Quality. My name is Elian and I look for stocks which are growing their most. Now, in this video, I will try to give you a complete overview of Monday.com, ranging from their products to their financials, while also touching on the management, how the company grows, and what I see. So at the end of this video, you know exactly what this company does and if it's a company you can see yourself invest in, just like I did in both my personal as well as my recently developed YouTube portfolio. The market holds a vast number of companies with different business models, and all these different business models have different strengths and weaknesses. As an investor, I look for scalable businesses, and I think that Monday.com has one of the strongest and most scalable business models out there. But let's start off with a brief history lesson of the company, as it might be good to know how the company has grown and scaled into the $11 billion company it is today. Monday.com was founded in 2012 by Roy Mann and Erwan Zinman. The company wasn't called Monday.com yet, as the company started life as DaPulse. In 2013, DaPulse came with the first prototype of the product we know today, and in 2014, the company launched from a tiny office in Tel Aviv, Israel. In 2017, DaPulse renamed itself to Monday.com, and in 2019, the company achieved unicorn status, a private company valued over $1 billion. In 2020, Monday.com Marketplace opened for business, and here external developers can build apps and integrations for Monday users. For example, you can integrate Canva or Figma so that you can change something in it, and this becomes immediately visible for all team members. You can also integrate Gmail, QuickBooks, or Microsoft Dynamics data into the platform, and these are well-known examples, but you can get many more applications for various problems in the marketplace. Then, in 2021, it was time for the company to go public. This was of course the peak of the IPO market, and Monday.com also made good use of it as the company went public for a valuation of $7.4 billion. In 2022, the company became a multi-product platform, which means it started selling more than just the dashboards from that point, as they launched Monday Sales CRM, Monday Dev, Monday Marketer, Monday Projects, and Monday Work Management. The three platforms Monday now sells are Monday Work Management, Monday Sales CRM, and Monday Dev. These tools see very good potential, but I will tell you more about the numbers in the later part of the video, so you will just have to hang on for that. Let's first look at what the different platforms exactly do, beginning with Monday Work Management. Monday Work Management allows teams to focus on executing tasks, projects, and processes efficiently and achieve shared goals at scale. Now that's a nice pitch, but what is it that you can do with the work management tool? At the basic level, it is work management. Big shocker, I know, but you can create schedules and add people to them. Here you can track the progress and provide feedback or comments so everyone can see and also respond to them, of course. These schedules can be done in multiple ways. You can use Gantt charts, dependencies, or Kanban boards, and many others. You can also create dashboards to track key metrics such as budgets or workload. This can be done for every department within the company. Whether it's marketing or finance, the dashboards can be customized for every purpose without the need for an expensive developer or someone that needs to write code for it, as it's all no code and built like building blocks that can fit on one another. So, what advantages does Monday try to sell here? Mostly, it's time and accuracy, as the work management tries to make it easy to manage tasks, workflows, and processes. The work management tool is the original product Monday.com created, and this is the main source of their revenues. But as I mentioned, it's not the only one. We also have Monday Sales CRM. The Sales CRM was launched in 2022 and allows you to manage your sales process from start to finish from within the tool. The Sales CRM once again tries to sell efficiency. It's again a no-code tool, which means you can simply stack building blocks on each other, just like with the work management tool. The CRM tool will help you automate repetitive work, centralize customer communications, and organize your data in one place. Monday Sales CRM allows you to integrate email into your account and send mass emails. Monday will also help you with the composition of emails through an AI assistant, and you can get notifications when your emails are opened. These are all small things, but they can help out quite nicely. You can also keep track of your sales pipelines, targets, and team performances through various dashboard setups, and you can also very easily integrate all your existing data into the platform to make sure it gets better organized. Because Monday also has an app, you can access all the details from everywhere so you can have access to all your data or contacts at all times. Finally, we have Monday Dev, and the best explanation I was able to find for this product was from toolfinder.io, where Francesco D'Alessio wrote a review of Monday Dev, and I'm going to quote here. But what he says is that Monday Dev is a flexible platform for developers to, you can guess it, manage projects. Monday Dev offers a wide variety of features like roadmap planning, feature backlog, sprint management, retrospectives, bug tracking, and regular project management designed more towards developers. It aims to capture the journey from product strategy all the way to launch, attempting to outperform other softwares like Jira, which is known in the market but not universally enjoyed. It is customizable, which means that the system setup in Monday.com is tailored toward developers and can be further personalized. It includes a range of automation abilities, including a range of integrations with over 250 platforms, including GitHub, GitLab, Figma, and many more, which developers really enjoy integrating into their system. Now, when we talk about integrations, here are some of the main integrations for each type of user. We can see GitHub, GitLab, and Jira Cloud for developers, MailChimp, Google Ads for marketing, Zoom, Slack, and Microsoft Teams for collaborations, and Twilio, Gmail, Outlook, and Zendesk for communications. These are a couple of examples, and there are over 200 more, but what you can see from this is that Monday allows you to integrate all the different programs into one platform, making work more efficient as you don't have to switch between platforms. So now that you know what the company sells, who are the executives behind the product? Now, we have six main executives and the two co-CEOs, the CFO, the Chief People and Legal Officer, Chief Revenue Officer, and Chief Product and Technology Officer. So let's start off with the CEOs, beginning with Roy Mann, the co-founder of Monday. Roy serves as CEO since 2012, and before this, he served as a senior technology leader at Wix.com. Before his time at Wix, Roy founded two companies, NTT, a website where you can very easily design websites, and Save an Alien, a game where you, now, who would have guessed it, save an alien. Then we have Eran Zinman, the other co-founder and co-CEO of Monday. Eran started off as Chief Technology Officer at Monday, but stepped up to co-CEO in 2020, when he also joined the board of directors. Before founding Monday, Eran was R&D manager at Como, where he managed 5 teams. Next up is Eleron Glazer, the CFO of Monday. Eleron has served as CFO at various companies since 2005, starting at Triana, after which he went to Next. In 2019, Eleron started working as CFO at Lightricks, an app which allows you to edit pictures or photos on your phone. Eleron has been CFO of Monday since 2021. Then we have Sharon Nawi, and she has been the Chief People and Legal Officer at Monday for about a year now. However, she has been with the company since 2018. Before joining, Sharon was the Senior Legal Counsel at Wix.com. Then we have Yoni Osherov, the Chief Revenue Officer, and he has been in this position for 6 years now. Before joining Monday, he worked his way up to Vice President of Product Management at Verint, a company that sells solutions to increase customer engagement. Finally, we have Daniel Lorea, the Chief Product and Technology Officer, a position he has held for less than a year. Daniel joined Monday in 2016 as Vice President of R&D, and in 2020 he also became the Vice President of Product. Before Monday, Daniel worked at IBM and SAP. Now, management is still quite young, with the oldest being Eleron, the CFO, at 52 years old, and the youngest being Daniel at just 39 years of age. Roy and Eran are 45 and 40 years old respectively. What I try to say with this is that the management still has a long time to go and can still grow a lot with the company. So now that we know the products and have seen the management team, we only have financial growth and my opinion left to go over. Now this is where all the fun begins in my opinion and where it gets really interesting. To paint a good picture of the growth story, I will take you through a combination of highlights from the recent Investor Day, as well as the annual report, and the Q4 2023 earnings report. We will start with the annual report and give extra context using the recent Investor Day. Beginning with revenues, we can see that this came out to $730 million, up 41% year over year. What is interesting about this is that most of the growth comes from expansion in seats. During the Investor Day, Monday said that almost 70% of the growth now comes from seat expansion, compared to 42% in 2019. It's of course a lot cheaper to sell additional seats to existing clients compared to acquiring new customers, so seeing this shift is a good thing. It also means that users are very satisfied with the product and increase the use. Revenue is coming down percentage-wise, but this is something that can be expected as the company grows in scale. In future years, it will be all about profitability, because apart from being cash flow positive, the company has also been net income profitable for the last 2 quarters of 2023, but ended up with a net loss of $1.9 million for the full year. 2024 will be profitable for this business if the business environment doesn't suddenly change. The annualized revenue run rate, or Q4 revenue multiplied by 4, comes out to $810 million. Without any growth, this would mean an increase of 11% in revenues already. The company, however, guided for high 20% growth in 2024 during their Q4 earnings report. Now, I will go over the full 2024 guidance at the end and how I think about it, but let's keep it at this graphic. Total customers were 225,000. This is something very good because it means the company is not overly dependent on one or a few customers. The number of customers has also grown at a rate of 26% CAGR over the past 5 years. The last year, it's still growing at 20%, so this means that it's not all growth in the first year and then slowing down drastically, but it stays high and it stays at an elevated number. Net dollar retention was 115% for customers with 10 plus users. This number is an average over the last 4 quarters, and during Q4, NDR was 110% when looking at all customers. This metric has been coming down due to companies being more careful how they spend their money. This sounds like a reasonable explanation because if we look at other companies, we can see how most of them are really focused on efficiency. The most extreme example being Facebook with their year of efficiency. Now, I'm not saying Facebook is a client, but this is just taking as a generalization. Management has also said that it sees this metric stabilizing and is expecting it to come back up in the second half of 2024. What we can also see is that gross margins are 89%. However, this is something you want to see for a SaaS business, and that the company has free cash flow of $215 million or 30% of revenues. The company mentioned that they want to keep a good cash flow margin, but that it also needs to invest in the business during the hypergrowth stage. It therefore thinks that the margin might come down a bit, but they find it a very important metric. Now again, I will tell you all about the company guidance when I go over my thoughts of the company, but you will just have to stick around for that part. ARR, or annual recurring revenue, is divided into a few categories. The easiest of which is at the split of 10 users and more. The group of customers with 10 plus users accounted for 78% of ARR. So 78% of 810 million is about $630 million of ARR is earned in this category. This means that the huge portion of small customers is also responsible for a decent amount of revenues. Now, this is very positive, but I will explain why in a moment. Let's first look at different groups and also about how they grow. Another distinction Monday makes is at the enterprise level. This is defined by customers with at least $50,000 of ARR. This group grew by 56% during 2023, from 1,475 to almost 2,300 enterprise customers. This group also accounted for 32% of ARR. If we look at the CAGR of this category, we can see that it grew at an astounding 132% over the past 5 years. Now, this is due to the group being basically non-existent in 2019, but it does give you a few tells, which I will go into in a moment. Then we have the group with at least $100,000 of annual recurring revenue. This group grew even slightly faster with 58% growth, from 527 in 2022 to over 800 in 2023. This group now makes up for 20% of ARR. This means that Monday is not dependent on a single customer as a client and that they are not very top heavy. This is a very positive thing. During the Investor Day, the company also announced a new biggest customer. This customer now holds 25,000 seats. This, however, was not a new deal, but a customer that used Monday already and where they managed to get in touch with management. This is notable because it reflects a theme Monday has been seeing, as they also hinted towards more of such deals in the pipeline, although maybe not as big. Such deals, where they already have an in, so to speak, with the customer, are very good for Monday, as it means that management of these customers notices the value of the product, and when you get one of these customers, you will probably get more. This is also where I see the enormous growth in the enterprise level coming from, as the company is growing bottom up. They start with one or a few departments, but then the company sees the value of the product and wants to use more of it. So, as we have seen in the various growth rates and growth metrics, let's look at the operational expenses, because this shows how much the company is trying to streamline operations. We can see that in 2023, operating margin was negative 5%. For 2024, Monday guided towards positive operating margin. However, this graph gives us a good view of where the money went and how this compares to previous years. I will not bore you with endless comparisons to 2022 and 2021, so you can look at this yourself. However, during 2023, sales and marketing costs were 60% of revenue, R&D was 21%, and G&A expenses were 13%. Now, we do know, however, that Monday is planning to add headcount, or about a 30% increase in it to be precise. This will be both in the sales team as well as the R&D department, and they have said that they want the sales teams to be more divided into individuals who become experts in one of the platforms so they will be able to sell this more efficiently. What we can also see is that even though revenue increased 41%, cost of revenue only grew by 21%. This made the gross profit rise from 87% to 89%. As investors, this is of course what we want to see, revenues rising faster than expenses, and the company really tries to do so. The quicker rising in revenues compared to costs also shines through in this graph, where we can see that total operating expenses grew by 14%. Share-based compensation is also reasonably controlled. In 2023, the company granted about $100 million in stock-based comp. This chart from Qualtrim illustrates it best. The orange bar is free cash flow and the purple bar is stock-based compensation. And here we can see that SBC actually came down from 2022. During the Investor Day, the company explains how they find it important that employees are aligned with the business, but that it shouldn't go at the cost of investors. And as we can see, at the end of Q4 2022, the company had about 47.5 million shares outstanding, and at the end of 2023, this number was about 51.5 million. An increase of about 8%, however, this is not all SBC. As we saw, the company issued about 100 million in stock-based compensation. Now, if we divide this by $150 as taken of an average of last year's stock price, we can see that this number should be around 666,000 shares, or dilution of about 1.4% due to stock-based compensation. In my opinion, this is a very good number for the size and the growth of the business. If we look at executive pay, we can see that Monday does not pay its executives with extreme pay packages in order to enrich the owners. Roy Mann owns about 11.5% of the company's shares, Erwan Zinmans owns just about 4.5%, and this means, in my opinion, that they are very much invested in their own company. In terms of total pay packages, the salaries displayed below contain dollar amounts in the thousands and account for monthly payments, which means that the chief officers got paid around $4 million annually. Now, this is without stock-based compensation, and Roy Mann and Aaron Zinman, who are compensated the most, both got just under $5 million of it, and the other executives received less. Now, as we go to the final part of this video, it's time for my thoughts about the company. As Monday is growing extremely fast, we can see how they create new opportunities. The company has launched 2 new products recently in Monday Sales CRM and Monday Dev. Monday Dev seems to be growing just as quick as Monday did originally, as this size quadrupled after 10 months. This is incredibly fast growth, however, it gets blown out of the water by Monday Sales CRM. This product grows 4 times faster than Monday did originally. It is now 22 times as big after the first 15 months as it was after the first month. When we look at Monday Work Management, the original Monday tool, we can see that the company sees this having a total addressable market of 45 billion and that the company expects this TAM to grow at 16% CAGR to 2026. Monday Dev has a current total addressable market of 17 billion and this is expected to grow at 14% CAGR. The product was launched in 2023, however, it already has 1,300 paying accounts. Then we have Monday Sales CRM. This product was launched in 2022, just before Monday Dev, but it already has an annual recurring revenue of $25 million. Monday estimates this product to have a total addressable market of $30 billion and that this will grow at a 14% CAGR to 2026. You may have already spotted it, but in the back end of 2024, Monday will also launch a new product, Monday Services. This product will be for help desk purposes, but also for portals or asset management. Monday Service is estimated to have a $9 billion TAM, and this is expected to increase at a 10% CAGR until 2026. Why are these addressable markets and the growth of it so important? Well, if Monday only manages to grow at the rate of the market, it is still setting up for reasonably good growth. On top of this, the company has just done a price hike for existing customers for the first time. This was for customers using the MondayDB platform, and the customers are reported to understand it as there has been a lot of added value in recent years. Churn was reported to be very little and mostly in the small accounts with little users. Most of the economics of the price hikes, however, will be captured in 2025 as 80% of the customers have annually billed contracts. Now let's talk about the 2024 guidance. The company guides for 27 to 28% of revenue growth in fiscal 2024, but I think that they are being very conservative here. I do believe that percentage-wise growth will come down a bit as it is too good to be true to keep growing rates at 40%. I think the cautioning guidance is being done to see if the macro environment actually improves as they think in the second half of the year and is accounting for little improvement in NDR. Remember, slightly under 70% of revenue growth came from seat expansion and just over 30% came from entirely new business. The company is also set to report full-year profits in 2024, and if they beat estimates by even half of how they did last year, the stock should perform incredibly well. I think that the people who are leading this company want to stay with the company and grow with it. But this is not factual, it is just a feeling I get when I listen to them speak. I also think that their compensations are well deserved for the performance of the company, and although I don't think they are compensated lightly, it's far from the crazy salaries you see at some other high-growth tech companies. As for the product, one analyst suggested during the Q4 quarter that Monday starts to become more of a layer between platforms, orchestrating them, as he said it. Roy answered this by saying that he does see this as a part of the platform and that they have worked a lot on the workflow tool, integrations, and automations. They see that the platform is used as an orchestrator for different software, but also for places where there are gaps in the software and the company uses. I think that when you start using Monday properly, it builds bridges between everything you do because it centralizes a lot of your work. It can help you through AI as they have got some automation bots as well as bots that are helping you with writing better emails and composing them quicker. I don't think that Monday necessarily has a moat, but it has strong selling points, like being fully customizable, something that can only be done with full enterprise software through expensive developers. Monday is a no-code platform. It is developed as building blocks that can be stacked on top of one another. But although I don't think it has a clear moat now, I do believe that when you work with Monday, it is one of those things you don't want to get rid of because it makes everything so much easier and efficient. The company has also given fiscal 2024 to fiscal 2026 guidance. These are the expectations the company sees from a base case, when the macro environment starts to deteriorate, or when it improves drastically. What we can see here is that if the macro environment deteriorates, the company will go defensive. But if the macro environment starts improving, it will go into attack mode and it will invest in order to keep it as long as possible at the hypergrowth mode. All of these decisions will be made with the use of their big brain database. That's the final thing I want to say I very much like about the company. They are data driven and this can be seen in the way they speak about their numbers. For these decisions, they use their big brain database. I hope you liked this video and that you now have a clear understanding of Monday.com in order to make your own judgment on whether you want to invest in this company or not. And if you are still watching, please consider subscribing to my channel and giving it a thumbs up, as I hope to see you in the next one.